Good afternoon and welcome back to Moneycontrol's live stream. You're tuned into Closing Bell with me, Lovisha, Darad, and joining me my colleague Yatin, Mota. Well, Yatin, it was the day of consolidation then. We were red throughout the day, and given the smart rally that we had yesterday and the muted global handover we started off today, it doesn't come as a big surprise. But the levels as it stands, Sensex down 200 points and Nifty below that 2550 levels. Other than that, let's look at some of the sectors that contributed to today's loss, which was your Bank Nifty index, Nifty Pharma index and Nifty IT index with a larger set of loss. And on the contrary, sectors that helped cushion the downside, those stood out to be Nifty Realty, FMCG and auto indices. Yet then if we look at for the entire week, Sensex and Nifty jumped about 4% or so. So after last week's loss, given this cross-border tensions, we are back again in the positive territory.
Back again in the positive territory, and it's a great week, for the markets, irrespective of today's move, or probably if you look at it on the isolation basis, a 100-200 point decline of the Sensex will not matter, because the market breadth is extremely strong. Midcaps have outperformed. Defense Nifty is at all-time high, and you look at the defense stocks on an average this week. We have seen gains in excess of 10% for most of the frontline defense stocks, be it the PSU stocks or be it the private sector defense names. The broader theme of the market remains mid-caps, PSU stocks, in which obviously defense stocks are doing well, but a lot of NBFC stocks, a lot of railway stocks also moved in trade today. So overall, quite a great week for the Indian capital markets. And mind you, we have the mutual funds which are sitting on a war chest of cash, nearly 3 lakh crore plus, money sitting idle to be deployed. Probably these are times wherein you will have a very big FOMO rally, in which probably fund managers would look to deploy next week as well. So I'm not worried about the markets. Probably we are on track to probably hit at all-time highs given the market positioning.
Quite a bullish sentiment that we can see for the next few days. But let's look at some of the top gainers and losers on the Nifty 50. Like Yatin was talking about defense stocks, that they are at all-time highs as well. We can see Bharat Electronics, that is one of the top gainers on the Nifty 50 charts with about 3.8% gains, once again up about, for the 6th straight day. Other than that, we can see Bajaj Auto with about 2% gains, up about for the 5th day as well. Tata Consumer up for 3rd day. Adani Enterprises, Eternal also doing well. On the other hand, we can see Bharti Airtel with about 2.8% downtick in the Nifty 50 losers list. We saw that the Sectoral sold about 1.2% stake in the company via a block deal. So we can see the sentimental play out which is coming in the counter as well. Some of the tech stocks didn't do well in today's trading session. HCL Tech, Infosys seeing a cut of about 1 to 2% or so. Other than that, on the Nifty 50 losers list, we can see SBI, JSW Steel and Shriram Finance also not doing well. But yes, broader end of the markets, they are the star performers this week and today as well, outperforming the benchmark indices. Yatin, what are you gathering from that space, especially for today?
So if you look at the mid-cap end of the market, it's quite active. As I mentioned earlier, the mid-cap index was up 1%, small-cap index moved 2%, and the advanced decline ratio like yesterday was almost 3:1. Now, railway stocks apart from defense stocks moved in trade. We had the RITES, Titagar moving 12 to 15%. Cochin Shipyard and Mazgaon Dock, both of these stocks also moved 10 to 12%. What did not do well post numbers, Newland Labs, that stock fell 6%. Medanta down 3%, and JSW Infra after that block deal by promoters fell almost 3% in trade. Bharti Airtel, remember there was a block deal as well, so that stock also was under pressure. But clearly we have Hindustan Aeronautics, top traded counter, 6% higher for that one. 4 p.m. is when there is a conference call wherein the management would be talking about their Tejas aircraft and the kind of supply chain issues which were there earlier, whether or not they have got resolved. Divi's Laboratories, BDL, BL, all of these stocks at multi-year highs.
All right. Now let's break down some of the stocks which were in focus. That is your IndusInd Bank, which did see that the entire day it was quite negative for the counter. But in the last few trading minutes, we can see the stock did recover and posted about 0.2% gains or so. The stock did see pressure after the internal audit team found out 2 new accounting lapses. They saw about 674 crore rupees, which was incorrectly recorded as interest over last 3 quarters or FY25. which was reversed on January 10 as well. And the audit also flagged about 595 crore rupees worth of unexplained balances in the bank's other assets account, which got adjusted against entries in other liabilities. So just weeks after the CEO and deputy CEO has resigned following the derivatives discrepancy, it looks like the troubles just don't end for the lender as well. We saw that the brokerages have downgraded the counter, and they've also slashed earnings forecasts for not only FY26 and 27 but also for FY25 as well. We saw CLSA downgrade the counter to hold from buy and even slash the target price, saying that after it adjusts the 675 crore rupees additional interest income, the bank would report even another 17 basis points margin contraction from before. CLSA also reduced the PAT forecast for FY25, and even Morgan Stanley also maintained an equal weight rating and slashed the target price to about 755 rupees per share. Morgan Stanley also said that the FY26 and 27 earnings estimates for the bank are at the risk of a 15 to 20% downgrade going ahead. Yatin, just weeks after the top hats of the company has resigned, now we have some accounting discrepancies as well. So quite a negative for the counter that is emerging.
Yes, in the last 3 months, there are 3 different discrepancies found out. The larger one being the 2,000 crore derivative loss, post which the deputy CEO and CEO have resigned. Obviously, the stock gapped down with a 5% cut. But now I think the stock is well trading below its book value, probably factoring in all of the worms which are there in the can. I'm not sure whether it is end of the accounting discrepancies because this comes after a whistleblower report which has come in. So let's see how the stock really recoups, especially to the quest of the new CEO. We don't know what RBI does from here on, but yes, a lot of discrepancies. Stock gap down, but managed to recover all its losses given the fact that markets did well, and probably the markets are now pricing in all of the bad news.
Okay. Let's look at another stock. That was your PB Fintech, because that stock fell about 1.3% today after the company's March quarter performance showed a Y-on-Y improvement across most parameters. We saw that the company's consolidated profit zoomed about 2.8x, while operating revenue also grew about 38% or so, and the margins also saw good expansion as well. Now, the company's Policy Bazaar platform, that was a major contributor to the revenue, and new initiatives in the company also saw good progress. What the brokerages are saying, Jefferies have shared a buy call on the counter, and they've shared a target price of about 2,000 rupees per share. They believe that the policy renewals and the more traction in new health insurance plans will help offset the weakness which was visible in the savings business. If you look at another brokerage firm, Citi also maintained a buy call on the counter, and they said that the negligible tax, margin improvement and strong growth in the back book will contribute to a strong profitability path going ahead. Yeah, then if you look at the insurance players, so far they have reported fairly good performance for the March quarter, and even experts have also recommended this space as valuations are turning cheap and much of the regulatory overhang is almost overdone as well. How do you view this?
So I think PB Fintech today fell on the concern that the growth is probably slowing. There were conference call flashes all over media, which indicated that the management is now looking at the premium collection, which could be slowing, and probably markets did not like those comments. After a gap up of 4% higher, the stock went down as much as 2% in trade.
That's right. Now let's talk to another stock in focus, that is your Cochin Shipyard, because while all the defense stocks are buzzing, this stock also did extend its gain for the 6th straight day, and it reacted well to its Q4 results, which was reported as well. We saw that the both revenue and net profit saw Y-on-Y increase, but the operational performance that took a hit. Now, despite a strong performance past 6 days, a very key report that came out today morning by Kotak Institutional Equities, they believe that the stock can fall another 60% from its current levels, as the lack of naval orders remain a key concern on the counter. What they believe is that the company has not won any major defense orders over the last 2 years, and the current order inflow is primarily driven by small-sized repair orders. The brokerage even lowered its FY26 and 27 earnings estimates by 3 to 6%, factoring in the moderation in revenue that would come because of lack of order visibility. Yet then earlier we saw even an antique report which cited inferior revenue visibility for Cochin Shipyard compared to Mazagon Dock and Garden Reach. So while the shipping stocks have been rallying, this Kotak report comes out quite a negative for the counter.
Yes, I think valuation wise, maybe Kotak believes that it is fully priced, maybe slightly lower. But I think the opportunity that Indian defense companies have in the light of the India-Pakistan conflict recently, it has expanded. In fact, if you look at the news reports today, they have suggested that India might increase 50,000 crores worth of defense outlay for the budget year FY25-26. Which means that from a budget of nearly 6.81 lakh crores will jump to above 7 lakh crores, 7.25 lakh crores plus. Opportunity is large, especially on the Navy side. We have seen the government is interested in building high value frigates, submarines, stealth carriers. A lot of various things are in the work. So probably the opportunity size for companies like Garden Reach Shipbuilders or the likes of Cochin Shipyard is much bigger, and probably markets is now factoring in that. As you mentioned, 12% higher for the stock today and 6 straight days of gains.
All right. What is the other stock in focus that you have, Yatin?
There was a CNBC TV18 report which suggested that Vodafone Idea has written to the government given the fact that they haven't been able to really make a breakthrough when it comes to their operational performance. In fact, Vodafone Idea has written to the government that without the support of the government, not only the government stake value will go to nil, but beyond FY26, the company wouldn't be able to operate. In fact, they are talking that despite the 20,000 crores equity infusion, which the money was raised via the FPO, government equity conversion still needs to be done. In fact, the Vodafone Idea dues to the government after the conversion still stand at 1.95 lakh crore. So Vodafone has clearly written to the government, and sources have indicated to TV18 that if the government support doesn't come, probably the company might go bankrupt. So these are the concerns coming from Vodafone Idea. Let's see whether or not the government would be supporting them further. Given the fact that post conversion the government is already holding a 49% stake. So it will be important to watch out for as to what kind of support does the government really look at to give to Vodafone Idea, without which probably the end days are near.
That's right. That's one stock that we need to watch out for as well. But with that, we have come to an end of this edition of Closing Bell. It's a wrap from Yatin and me. Thank you for watching and have a good weekend.